Something very strange is happening right now. There is a war happening, a real war, between the United States and Iran. Bombs are falling, oil prices are surging, stock markets are dropping. Investors around the world are panicking and moving their money into the safest assets they can find. And XRP is going up.
Not down. Up.
Since the United States and Iran conflict began on February 28, 2026, XRP has risen 17%. 17% during a war, while everything else is selling off. And nobody, not a single major YouTube channel, not a single mainstream financial news outlet, has properly explained why this is happening.
Until today.
Because in the next 12 minutes, I am going to give you the complete explanation. Simple, clear, fact by fact. And by the time this video ends, you will understand something about XRP that 99% of people holding it right now do not understand. And that understanding might be the most valuable thing you learn about XRP this entire year. Let us start right now. Here is the first thing I need you to do. I need you to forget everything you think you know about how wars affect financial markets for the next 12 minutes. Because most people have one simple belief about wars and money. Wars are bad for risky assets. Wars make people scared. Scared people sell risky things and buy safe things. Gold goes up during wars. Government bonds go up during wars. Cash goes up during wars. And risky things like stocks and crypto go down. That is the conventional wisdom. And it is correct most of the time. But XRP has gone up 17% since this war started. So either the conventional wisdom is wrong, or something very specific is happening with XRP that makes it behave differently from other assets during this particular conflict. And the answer is the second option. Something very specific is happening, and I am going to show you exactly what it is, step by step. Step 1. Understanding what actually happened on February 28, 2026. On February 28, 2026, the United States military launched strikes against Iranian nuclear facilities. This was the beginning of what became an active military conflict between two of the most powerful countries in the world. The immediate market reaction was exactly what conventional wisdom predicted. Oil prices surged. Because Iran is a major oil producer and conflict in the Middle East always creates fears about oil supply disruptions. The stock market dropped. Because war creates uncertainty, and uncertainty is the enemy of stock market confidence. Gold rose. Because gold is the classic safe haven asset that people flee to during times of global fear. And crypto initially dropped too. Bitcoin fell sharply in the first 48 hours after the conflict began. Ethereum fell. Almost every major cryptocurrency sold off as investors moved to safety. But then something happened that nobody expected. XRP stopped falling, and then it started rising. Slowly at first, then faster. And as of today, XRP is up 17% from where it was when the war started. Why? Step 2. The $1 billion clue that explains everything. On March 11th, 2026, 11 days after the conflict began, something happened in the crypto market that most people completely missed. $1 billion worth of USDT was minted on the Tron blockchain in a single transaction. Now let me explain what that means in simple language, because this is the key to understanding everything. USDT is a stable coin. It is a digital dollar. 1 USDT is always worth $1. When new USDT is minted, it means new money is entering the crypto market. Fresh capital, new liquidity, real dollars being converted into digital form and prepared for deployment into crypto assets. $1 billion of new liquidity entering the crypto market in a single day is an enormous event. It is like someone opening a massive water valve and letting a flood of new money pour into the system. And here is what happens when a flood of new money enters the crypto market. It does not go to every coin equally. It goes to the coins with the strongest fundamentals, the coins with the most institutional support, the coins that sophisticated investors believe will perform best in the current environment. And right now, with Goldman Sachs holding $154 million of XRP ETFs, with MasterCard officially partnered with Ripple, with the DTCC integration in place, with 83 institutions officially holding XRP exposure, the coin that sophisticated investors are directing new liquidity toward is XRP. That $1 billion USDT mint on March 11th was the trigger. That is when XRP's rise accelerated. That is the moment the money moved. Step 3. Why wars specifically benefit XRP in a way they do not benefit other cryptocurrencies. This is the part that most people do not understand, and it is the most important part of this entire video. When wars happen, governments spend more money, much more money. Military operations are extraordinarily expensive. The United States has already committed hundreds of billions of dollars to this conflict, and governments do not have that money sitting in a bank account. They create it, they print it, they issue new debt, and the central bank buys that debt with newly created dollars. This is called fiat currency dilution, and it is one of the oldest and most reliable consequences of war throughout human history. When a government prints more money to pay for a war, every dollar that already exists becomes worth slightly less. The purchasing power of the dollar erodes. And when the purchasing power of the dollar erodes, smart investors start looking for assets that hold their value better than dollars. Historically, the asset was gold, and gold is rising right now. Gold has climbed significantly since the conflict began. That part follows the conventional pattern. But here is what is new and different in 2026 compared to every previous war in history. For the first time, there is a digital alternative to gold that institutional investors are taking seriously. An asset that cannot be printed. An asset with a fixed and transparent supply. An asset that can move across borders instantly without any government's permission. An asset that the most sophisticated investors on Wall Street are now officially holding in regulated financial products. That asset is XRP. When Goldman Sachs needs to protect a portion of their clients' wealth from dollar devaluation caused by war spending, they now have a regulated XRP ETF product available to them. When institutional investors around the world look at the dollars being created to fund this conflict and they want an alternative, XRP is now a legitimate institutional option in a way it has never been before. This is why XRP is rising while a war is happening. It is not a coincidence. It is not random market noise. It is the logical consequence of XRP's institutional adoption reaching a critical mass at exactly the moment when institutional investors have the strongest possible reason to look for dollar alternatives. Step 4. The supply data that makes this even more significant. Here is one more piece of the puzzle that confirms this is a real structural move and not just temporary speculation. XRP's Binance Scarcity Index is showing historically tight supply right now. What this means in simple language is that there is less XRP available for sale on the largest crypto exchange in the world than there has been in a very long time. When supply gets tight and demand stays the same or increases, price goes up. That is basic economics. It works for oil. It works for real estate. It works for gold. And it works for XRP. The combination of new liquidity entering the market through that $1 billion USDT mint and tightening available supply on exchanges created the exact conditions needed for XRP's 17% rise since the conflict began. This is not hype. This is supply and demand, and the data supports it. Step 5. The Fed connection that makes this story even bigger. Now here is where this story connects to something even larger, something that very few people are talking about. The United States government is spending enormous amounts of money on this conflict. That spending is inflationary. It puts upward pressure on prices across the economy. And the Federal Reserve, which is supposed to fight inflation by keeping interest rates high, is now caught in an impossible position. If the Fed keeps rates high to fight inflation, it makes the cost of financing the war more expensive and risks slowing the economy. If the Fed cuts rates to support economic growth, it risks making inflation worse at exactly the moment when war spending is already pushing prices up. This impossible situation is what financial analysts call a policy trap. And historically, when governments fall into policy traps during wars, the assets that perform best are the ones that exist outside the traditional financial system. Gold. And now, XRP. The Fed decision that happened yesterday is directly connected to this war story. Every rate decision the Fed makes for the rest of 2026 will be influenced by the cost of this conflict. And every time the market gets nervous about the Fed's ability to control inflation during wartime spending, that nervousness pushes more money toward assets like XRP. Step 6. What this means for your XRP right now. I have shown you 5 specific reasons why XRP is rising while a war is happening. Let me now give you the practical takeaway. What does all of this actually mean for you as someone holding XRP right now? It means the forces pushing XRP higher right now are not temporary. They are structural. War spending creates dollar devaluation. Dollar devaluation creates demand for alternatives. XRP is now a legitimate institutional alternative in a way it has never been before. And institutional alternatives do not get abandoned after one news cycle. It means the 17% rise we have seen since February 28th is likely the beginning of a larger move, not the end of one. The new liquidity that entered on March 11th through that $1 billion USDT mint does not disappear overnight. It gets deployed gradually into assets like XRP over weeks and months. It means the next time you hear someone say that geopolitical tension is bad for crypto, you can correct them. Geopolitical tension is bad for crypto in the very short term, because fear makes people sell everything indiscriminately. But in the medium and long term, geopolitical tension that leads to war spending and dollar devaluation is actually one of the strongest possible fundamental arguments for holding an asset like XRP. And it means that if this conflict continues, and if the war spending continues to grow, and if the dollar continues to be diluted, the fundamental case for XRP gets stronger every single day. Now let me be honest with you, because this channel is always about honesty. Not everything about this situation is positive for XRP. There are real risks that you need to understand. Risk number one: if the conflict escalates dramatically and causes a full global financial crisis, all assets sell off together, XRP included. In a true panic, even the best assets fall. Cash becomes king, and XRP could fall sharply before recovering. This is a real possibility, and you need to be prepared for it. Risk number two: if the conflict ends quickly and war spending stops, the dollar devaluation argument weakens. Some of the new money that came into XRP could exit just as quickly. A fast peace deal could cause a short-term correction in XRP's price, even if the long-term thesis remains intact. Risk number three: oil prices surging because of this conflict creates economic pain for ordinary people around the world. When ordinary people are struggling to pay their energy bills, they have less money to invest in assets like XRP. This reduces retail participation in the market, which can slow price appreciation. These risks are real. They deserve respect. Anyone who tells you the war is purely good for XRP is not giving you the complete picture. But here is my honest overall assessment. The structural forces supporting XRP right now, the institutional adoption, the regulated ETF products, the MasterCard and DTCC integrations, the tight supply on exchanges, and yes, the war-driven demand for dollar alternatives are more powerful than at any previous point in XRP's history. The 17% rise since February 28th is not an accident. It is the market beginning to price in a combination of factors that have never all been present at the same time before. Whether that continues, and how far it goes, nobody can tell you with certainty. But the direction the evidence points is clear. Let me give you your final summary. Simple, clear, for sentences. A war between the United States and Iran began on February 28, 2026. War spending is diluting the dollar. Institutional investors are using regulated XRP products as a dollar alternative for the first time in history, and XRP has risen 17% as a result. That is the shocking reason nobody is explaining. Now you know it. Now I want to hear from you. Do you think XRP will keep rising if the war continues? Type yes if you believe XRP will hit $2 before this conflict ends. Type a no if you think a market correction is coming regardless of the war. And type watching if you are waiting to see what happens before making any decisions. Drop your answer in the comments right now. I reply to every single comment in the first hour after this video goes live. Let us talk about this together. If this video explains something that you did not understand before today, please subscribe. Because this channel covers the real reasons behind XRP price movements every single week. Not hype, not price predictions that never come true. Real analysis of real events that affect your money. My next video is going to continue this story. Because the war is not the only thing happening right now. There is a massive debate in the XRP community about whether Ripple itself is secretly working against XRP holders. The evidence on both sides is shocking, and I am going to cover it completely and honestly. Subscribe so you do not miss it. Thank you for watching. I will see you in the next one.